Good morning, America. Good afternoon from Germany. And it's Wednesday. It's really windy outside. And yeah, let's see if we can see some stormy weather at the stock exchanges as well. So we have a lot of news today. So let's start with the news and see which news we have today. Just bring up the tab for you here with the news. Today we have ISM manufacturing PMI in about 40 minutes, so 30 minutes after the market is open, and JOLTs job openings also at 10 a.m. and FOMC meeting minutes at 2 p.m. Eastern time. So a lot of news today, and this will maybe be some kind of catalyst for the market. Let's see what we can expect here. At first we will have a look at Nasdaq and see the important levels from the up or downside. Let's move to a day chart as first and then see what's next. So yesterday we went up or opened up high but went really low. We retested the lows of the previous day from the last year, from Friday. But finally we managed to get higher. We almost closed at 11,000 but then went a little bit lower and closed at 10,945 points. Today we are about at the same level at 11,000 and regaining some traction here above this area, but still below the 9 EMA line and still below parabolic SAR. But maybe we can manage today to get above 9 EMA and parabolic SAR dot. You can see it here. This red dot here is right at the 9 EMA level on a day chart. And you see the important area. We had drawn some lines here, because here we had this doji candle where we could see some support, and this previous support yesterday was now a rejection. We had it here on December 27th and the same yesterday on January 3rd. And yeah, this is now the third attempt at this level. If we can reach it again, the high point of yesterday was 11,181 points. And if we can manage to go higher than this level, then probably we'll see a 70 points rally to the next level here, 11,250. So this will be an important level on the upside today, this Fibonacci level, and because there's you see the blue line to the 20-day EMA line, and therefore this is an important level, 11,250 points on the upside. On the downside, again, we have this area here. If I go to a lower time frame, you will see it. It was an important area yesterday. We went to this area, saw a smaller reversal here back to the 9 EMA on a 15-minute chart, then went back, had again a second bottom here a little bit lower, but then we went at the high point of this area and then we sold off to the lows of December 30th. So this is an important area. Also the lows of yesterday, of course, but this is an important area because there's a psychological 10,900 points level. And therefore I'm looking at this level on the downside. And if we cannot hold in this level, then probably we will retest the lows here at 10,750 points. So still a sideways market for several days now. As you can see here, we need a breakout above the level of 11,250. Best would be to close Friday above this level here, or below this level here. Then we see a breakout to the up or to the downside. I still have the same position, no changes, only 2 micro Nasdaq futures long. So it's just a sideways trading phase, so there's no clear direction right now, but I want to see the breakout to the upside. I don't see a lot of inflation risk anymore. There will be more fear of recession risk, and therefore it will be interesting to see the economic data today, and especially the Fed meeting minutes, because there we will see the last Federal Reserve meeting is already oh, sorry, you cannot see my chart, but my bad, sorry, I didn't change for you, so sorry, now you should be able to see it. So again, for the levels here, the 20 EMA level is here at 11,250 and the 9 EMA level is right here at the high point of today, 11,050 points. But for the news, I expect that we will see a lot of movement around the Federal Reserve meeting minutes, because the last meeting is already backdated 3 weeks but here we can see what the different members of the Federal Reserve had as opinions and what they thought. And therefore it will be interesting to have these Federal Reserve meeting minutes today at 2 p.m. Eastern. And yeah, also the economic data here half an hour after the market is open, but this will cause, I think, more movement, because I think that some members of the board will be more dovish. So they think that we don't have to go higher with interest rates, and therefore we should go even lower with the interest rates, or we are near the top at around 5 or 5.25 percentage points. And therefore I think this will cause a lot of movement and can cause movements to the upside, because I think the FOMC meeting minutes will show some dovishness, because some members think that we should wait with more rate hikes or even go lower with the interest rates. And therefore I don't think that we will see 50 basis points in the next meeting on February 1st. It will be probably 25 basis points and one more step to the upside with 25 basis points. That's max. So what the market is expecting right now is just 50 basis points in the next two meetings and not more. We can see this in the FedWatch tool. So let's go here. Next meeting is on February 1st in 28 days and 4 hours. And here we see a probability of about 70%. That's what the market is expecting right now. 70% for interest rate hike to 4.5 to 4.75%. And this would be a 25 basis points rate hike, because the current target rate is at 4.5% right now. Yeah, the next meeting after February 1st is on March 22nd. And here you see that the 60% probability is for the 5%. So another 25 basis points rate hike. If we see a 25 basis points rate hike on February 1st, there will be a second 25 basis points rate hike on March 22nd. And then that's it, because there should be the high point. As you can see here, the expectancy is for the level around 5%. And maybe we will see 5.25%, but I don't think so. So 5% should be the high point of the interest rate. And yeah, let's see if the market can party the expectancy that we will see the high point of the interest rate level, and we can probably see this in the FOMC meeting minutes at 2 p.m. today. Okay, yeah, that's it for Nasdaq here. Hope you, even if you haven't seen my screen, sorry for this. But yeah, the important levels are where the lines here are. So 11,250 is the most important one on the upper side, and the 11,750 to the lower side. So you see that we have about the same distance to the upside and to the downside. So we are right in the middle, and I only have my small long position with my 2 micro Nasdaq futures long, because I think that we will see a little bit of dovishness with the Federal Reserve meeting minutes, and this can cause a smaller rally. But as always, everything can happen. You have to prepare for everything. Okay, what's a dot plot? Yeah, I can show you the dot plot. So the dot plot is what we have seen the last Federal Reserve meetings three weeks ago. So let's go back to this one. Here are all the meetings. You can go back to all the meetings and see all their papers. So the last meeting was in December. Here you see 13th to 14th of December, and you can open the PDF for the statement, and here's a projection material, and you can open the PDF file, and there we can scroll down to the Fed dots. So these are the Fed dots, and now you know why they are called Fed dots, because here we'll do it a little bit bigger for you, because here we see the projections of the members. So we have 19 members of the Federal Reserve, and everyone can make a projection for the interest rate level at the end of the year. And here you see the expectations of the different members, and you see that it's not everyone is expecting the same level. So you see some are expecting higher levels, around 5.5% or even higher, and some are expecting lower levels below 5%. So it's interesting to see, but the majority is here at this 5.5, between 5 and 5.25 percentage points. So this should be the area where we will settle. And you see that the interest level will probably come down in 2024 and 2025. But as Jerome Powell already said, we will see 2 more years with higher inflation rates than we want to have. We want to have the 2% inflation rate level, but therefore we will have a longer time with higher interest rates. Here next year 4%, and even 2025 around 3% interest rate level. And then longer run we will see probably the 2.5%. Market is open now, so let's go to a lower time frame just to see what's happening here. So we are around the high points of today of pre-market. The high point was 11,048 points here at 2:24 p.m. my time. Market is selling off a little bit here. And let's just go to Tesla, because Tesla is a stock which moved a lot in the last days. As you can see, we retested the lows here. Previous low was $104.22 pre-market. This was a pre-market low. And yesterday we reached $104.64 while the market was open. And yeah, today it's just trading sideways here. We had the really low levels yesterday because of the bad delivery numbers. We talked about this in my live stream from yesterday. And yeah, the stock is coming back a little bit together with Nasdaq, but it's still a weak stock at the 52-week lows. And yeah, therefore we have to wait what the market is doing. I can imagine that we will retest the $100 level for Tesla, but yeah, everything can be different, so just prepare for everything. I have no position here right now. The next important date for Tesla is January 25th, where the earnings come out. But this is an important level because it's around psychological level, the $100 level, and you see the previous support here at around this area, even on a monthly chart. So therefore it is an important level. You see the previous low here was $102.67 in September 2020. Yeah, more sell-off here, but we have 28 minutes left for the news, so a lot of movement in the first minutes like every day. We just have to wait for the market to find its direction and to settle. VWAP is around here, as you can see, but now there's more volume. You see the volume bars here. A lot more contracts are traded now at the opening, and therefore volume weighted average price will move and come down to the current price level. Let's go on with the VIX. Volatility index is showing a little bit higher than yesterday, but you see yesterday we had a lot of movement. We made an up gap here from the closing of last Friday and went to high points of 23.7. Today we are at 23.2. So not really high compared to the previous weeks we had in November, but higher than the last weeks of December. So there is a little bit of fear because of the economic news, but not really fear, not really a market in fear. So this would be when we are above the level of 30, then you can say that the market is really in fear, but not right now. Just a little tension, I would call it. And what else do we have? Euro USD is interesting. We moved back. We had this strong downturn yesterday and the break of the support level here from this sideways trading phase, but now we are coming right back. We talked about this. There's a big chance of 70% to come back to these levels here, but now we are again back in this area. Let's see if we can stay there or if we will go lower within the next days here. Yeah, the markets are stronger and therefore Euro USD should rise further. So it's just a normal thing, a normal correlation between Euro USD and the stock markets, because when the stock market is strong, more US dollars will be sold and will get into riskier assets, and that's what is happening here. US dollar is weakening and euro is getting stronger. Then we have sugar. Back to the futures. Sugar is again at the lows of yesterday. I have no position right now, but it's interesting to see that I was on the right side when I shorted sugar here. I just had to be more patient to ride it to the downside, but yeah, I closed it right here in the previous year, and therefore I'm still happy with this trade, even if I'm not into it anymore. The same with crude oil. A colleague of mine shorted here right at the $80 level for a double top here. I didn't do this, but yeah, it's looking bearish now, as you can see with lower highs and a failed breakout here to the upside. So this is a double top, and you see we are now turning back to this previous low point here of $73.40. So we'll probably see a retest of this level, and if you are in a short position, you could close it here or ride it to more to the downside, because it's still a downtrend in crude oil. The same in natural gas. Let's go to natural gas here. We have the support level here. We talked about it yesterday with the level around $4. We had lows of $3.98, lows of $3.89 yesterday, but the closing was at $3.98. Today we are above the $4 level again at $4.09. So let's see if we can see a smaller pullback. We talked about a potential trade here with a nice risk-reward ratio to the upside here. So this could be still be an interesting trade to the long side. I'm not trading it because I still have a short put position with a $3.70 strike. This is in the red right now, and now I've opened my portfolio, so it's in the red 27%. So I lost about $400. I've not closed it, so it's still open. 22 days until expiry, so it can still turn in the green. But when we are talking about the green is my Netflix trade. Netflix is a lot stronger than Tesla, as you can see. We are away from the lows, so we retested the lows here on December 28th, but we managed to close right at the low points here. So we hold the line and are getting higher. So maybe we will see a retest of the 300 level today like we did yesterday, and maybe we can see a breakout above this level. You see the 50% Fibonacci level here at about $302.50. Maybe we will see a retest of this level, but my position here, I have 235 strike put expiring in 16 days, 1 day after the earnings. But I want to be out of this position before the earnings are out. The earnings are on January 19th, and I want to be out of this position before the earnings come. But I'm in the green with this position with 58% right now. So you see, it's just trading sideways. But I entered this position on this day here because we have seen a retest of the lows, and then we went back up. So I entered this position here and left it here. Then I reopened this position here, and I'm still in the position right now. So the first time I collected 60% on these 2.5 days here, and now I'm back in the position. And in this is the 5th trading day today, and I'm up 58% with this position. So yeah, this time I want to ride it to the 80% level. So let's see if the news are in our favor for the whole market today, the economic news, and if we can go higher by $2 or $3, and maybe I will be able to close it. Let's see. Yeah, the theta decay is really high because this option right now will lose about 24 cents a day. I will just bring up my option trader so that you can see it. Netflix, where do we have it? A lot of open tabs here. Where's my Netflix? Here. Netflix, and here, January 20, 16 days until expiry. And I do have the 235 strike put. You see it's around $2 now, but it's losing theta decay 23 cents a day right now. So every day nothing is happening, the stock price is staying the same, this option will lose 23 cents. And that's the interesting thing, because I can make money by just nothing happening. And that's what I like about selling options. And when the stock is pulling higher like now, then I can make more money. Implied volatility is just going sideways, so no more movement from here. That's good for me because I will lose if implied volatility is getting higher. But for now it's just going sideways. That's good in my favor, and therefore just waiting and sitting on this position here. Back to Nasdaq, we see we pulled back, so a lot of movement in the first minutes. Market is now open for about 10 minutes. We retested the 11,000 level here and managed to go back above the moving averages. Let's see it on a 5-minute time frame now. As you can see, big bars now, big volume bars right below the moving averages here on a 5-minute time frame. But the news in about 20 minutes will be the most important thing today. Okay, let's go on with what else do we have? US dollar, Japanese yen. So we talked about this yesterday, and here we can see now we had lower lows, as you can see, below the 130 level. Let's see if we can close this week above the $130 level. So yesterday we went at lows of $129.50. But if we manage to stay above the $130 level and close this week above this level, then we can potentially make a shoulder head shoulder. So this is the first shoulder, this is our head here, and the second shoulder would be here around $138 to $140. Around this area should be our second shoulder. So this will take 3, 4 or 5 more weeks to form this shoulder, but this will bring an upside potential of about what is it here, about 6 or 6.5% to the upside, if we can manage to form a second shoulder. And this is a pattern we often see, that we don't crush here like in a crash, but that we just see the support area here and come back again to the previous local highs. Like here we had this high point in July 2022, and yeah, maybe we will see this strong bullishness for the US dollar and a little bit weaker Japanese yen, but then we will probably pull back. We had the same pattern on a monthly chart for Tesla. There you can also see really good that we had this shoulder head shoulder formation. This was the first shoulder, this was our head, and this was our second shoulder. And our neckline was right here at the 200 level. You can see we had here low points, we had previous low points here. So we went lower, you see we had lower points than $200, but we managed to close above at the end of the month. So therefore it's always important to wait for the closing of the candle on a higher time frame, like a week chart on US dollar Japanese yen, or a monthly candle here on Tesla chart. But then we had the break. We closed the month right at the $200 level. You see here the closing was at $195.90, but we went even lower here in this month. And on December you can see how weak December was, but everyone could see this on a higher time frame because Tesla was weak, and we closed below the neckline, and therefore it's just normal to see more weakness, because now this is an important support level and we broke the support level. And now we are at an important support level again. And we will see what will happen here, because the stock is still weak. It's selling for the 6th consecutive month now. But yeah, maybe we'll see the first green month, or maybe half green. I don't know, but the $100 is an important psychological level. Maybe we will retest it here and sell off a little bit to $98 or $99. But I want to take a short put position here, maybe a 75 or 80 strike short put. The risk is that we have the earnings, and the earnings can, the price can go on every way, either the upside or the downside. So yeah, I don't want to trade the earnings. Maybe I'm waiting for the outcome of the earnings on January 25th and then take on a trade. But yeah, I like to trade high implied volatility. And as you can see here, implied volatility is really high right now, because the last time we had these high implied volatilities was in November 2020, so 2 years ago. And therefore I like the high premium you get right now because of the high fear and the high risk. Of course, you see the movement for Tesla is really a lot here. You see in the previous 3 days we had about 16 to 17% movement. Even for Tesla, that's a lot. And like yesterday, we sold off, what was it, 12 or 13%, more than 13%. So it's just crazy. And therefore, you have high option premiums right now just to cover these risks. Back to NASDAQ. Yeah, still trading sideways. We are not able to break above the high points. You see here, this was the high point when the European market opened, and here also the second high point pre-market. So 11,050 is an important high point for today. Just let's draw another line here, just to keep this in mind when the news are out in about 15 minutes. Yeah, a lot of time is just waiting time when trading. Even if you are a day trader, you don't have to be in a position all the time. Just sit and wait for the news. You don't have to trade the news. I don't trade news, but you can use the news as catalysts. Just wait for the news to come out and let the market find its direction, and then trade the direction. The trend is your friend. Trade the trend and don't try to fight the trend, because you will lose. You will lose more than you can win when riding the trend instead of fighting the trend. Again, retest of the lows here. Not really interesting. The market is just trading sideways and waiting for the news. So we have to wait for the news and then see the direction, and then we can trade the direction. What else do we have? If you have a special stock you want me to watch, then just let me know. What else can be interesting is Meta. Let's see, I don't have an open chart for Meta, but I can open one for you. Meta. It's an interesting stock because we surpassed, yeah, we'll just bring up Nasdaq index. So here you see Meta is about to surpass a Tesla. It's not right now, but soon we will have a higher weight than Tesla, because Tesla is really weak right now. So it will lose more weight in Nasdaq, and Meta can gain one place here and be the 7th largest stock in Nasdaq soon. I've seen this change already in QQQ. QQQ is an ETF following Nasdaq, and their Meta platforms has already a higher weight than Tesla. I don't know if the numbers here are actual, but probably we will soon see that Meta platforms will have a higher weighting than Tesla. So you can see the difference between Tesla and Meta, because Meta is really strong in the previous days compared to Tesla, which is really weak. And that's interesting because these two stocks have almost the same weighting in Nasdaq. And if you compare the previous weeks, you will see the big difference, because here we went from the low point of October 31st to a high point now. So the low point was 88 and the high point today was 129. So this is a big difference, because we went up higher by more than 40%. So what Tesla lost was the win of Meta. And that's interesting to see that there are stocks which perform really well, especially in these difficult environment like we are right now with technology stocks, which is difficult for Tesla, but the Meta was already down, and therefore they buy now Meta stock. We talked about my long-term expectation for Meta already. You just rewatch previous live streams. I like Meta. I have a big position in Meta in my long-term portfolio. Yeah, still trading sideways here for Nasdaq. Not really interesting to see. What else do we have for Netflix? Yeah, let's just see my option position in natural gas. So you can see the price movement. So this option is moving really fast right now, because because it's only a few days left until expiry. So there are 22 days left until expiry, and now you see the drop of natural gas prices made this put option go higher. This is a $3.70 put expiring in 22 days, and you see how far we went up from previous week. On December 30th, last Friday, we closed here at about 12 cents, and we went to high points of more than 24 cents. So this is more than 100% to the upside, of course, but it's only a small position in my portfolio. And let's go back to the natural gas chart, and you will see how weak natural gas is right now. So we have more potential to the downside, but what I want to trade is just this small rejection here at the support level here at $4, and then I can be out of this position again, just taking 60 to 80% profit in an option. And theta decay is again in my favor. So every day nothing happens, I will make money just by time value going lower in this option. That's the interesting thing again. And second point is implied volatility, because if we look at implied volatility, while natural gas prices are dropping, implied volatility is dropping. Not in the last 2 days, because this were really huge drops. As you can see, yesterday we had a drop of, what was it, 10 or 11% down. So huge drop yesterday in natural gas prices. So this causes more fear and implied volatility is going higher. But normally when we come down with natural gas prices, there's less fear of the higher natural gas prices, and this is a risk for the economy, and therefore we see more and higher implied volatility in the option prices, because a lot of companies want to cover the risk, and therefore they ask for calls. They want to buy calls, and then they pay more premium, and this is what we see with higher implied volatility. But as more as natural gas prices are coming down, there's less need for covering this risk, and therefore less demand for calls, and that's what we see in implied volatility, just coming down the implied volatility. So the expected movement for natural gas for the next trading year is not 140% anymore, it's just 92%. Yeah, it's still a high number, but it's less than we had here in November, because there we had an expectancy of 140% movement. And this causes, of course, the option prices to go down. So even when the price is going against my strike of $3.70, my option loses in value, because there's theta decay and implied volatility is dropping. These are two factors in my favor. So that's why I always say option trading is multidimensional. You have not only the direction of the underlying, like here natural gas future prices, but you have also the movement in time, so theta decay, and you have the change in implied volatility, that's called vega. And yeah, of course, these are huge effects on the option price. So of course, because of the huge drop yesterday, these options here doubled in value. But we are really near the strike now, and you see the price is dropping fast now from the high point here of about 24.5 or 25 cents. We are now down to about 19 or 20 cents again. So this is a huge drop of about 18%, while natural gas is only up, sorry, where's the chart again? While natural gas is only up 1.7%. So you see the high leverage you now have in this option, because it's near the strike. But as soon as we see a recovering of the prices, then this option will go down in value. That's what I want to see. I want to buy it back at a lower value, and then the difference will be my win, my gain. Still waiting here, fighting for the 11,000 level, 8 minutes until we see the news. Do you have other stocks you want me to analyze? Then just write them into the chat and I can have a look at them. Would it be too late to buy Meta now? It depends on how long you want to be invested. For a long-term investor, you don't care about investing now. It's still an interesting stock long-term for 5 or 10 years. It's still cheap. Just compared to the previous year, you see, it's still cheaper than in March. It's cheaper than in June. It's cheaper than in August. It's even cheaper than at the beginning of October. So, yeah. We don't care about 40% movement from the low points, because who is able to catch the low point? Almost no one is able. And therefore you just have to do your own due diligence. What's your fair value for Meta for the next years? What can they do in earnings? You have to have your own expectancies, and then do a due diligence and have your own targets. So I think Meta was overvalued, of course, here, but now I think it's really cheap. Look how far we went down. Yeah, that's not a sign for how cheap a stock is, because it was really overvalued here at this point. I don't expect the stock to go back in the next year to this level, of course, because interest rates are higher. This is a big issue for a company which makes most of the money from ad spending. Yeah, because other companies have higher interest rate costs now, and therefore they have less money for ad spending, because ad spending is normally the last thing they give money for. And we went down 77%, so this is really steep. And yeah, of course we can recover. So let's use my favorite tool, Fibonacci, here for this huge movement here on a high time frame. It's a week chart here. You can also use a monthly chart. It's not important which time frame you use, just the low point and the high point here. So just catch it almost. Yeah, the high point should be here. And you see how good these Fibonacci levels already work. You see here, 23.6% was a previous support level. Interesting. 50% was a previous resistance level. Interesting. So yeah, probably these levels will work again. 23.6% was a previous support level, will now act as a resistance. $157.80 is this level, so around the $160 level. Next level here, around 200 level, and then the 50% level is the previous high point here at $237. So these are the next important levels for Meta stock, not for the next week or the next trading hour, but for the next months or years. But it's important because now you have clear targets. If you just want to trade, you have an upside potential here of 21%, to the next level 56%, and to the 50% retracement of 83%. So yes, it's still interesting to buy in Meta, even if you trade it on a higher time frame. So if you swing trade it for several weeks or months, or if you are a long-term investor like I am, then it's still interesting, in my opinion, to get into Meta. Yes, of course, we can see lower levels because I think that we will see a worse than expected recession, and therefore stock market can drop again. But it's interesting to buy in at these levels, maybe just half your position size, and then with a second position at the lower levels, like at the 100 level or at the previous lows. We never know where the exact bottom is, we just have to wait, and then finally we will see, if we look back, which was the bottom, but almost nobody will catch it. You could expect here to be the bottom, then we had 4 weeks going higher, then we had a new lower low, then we were going higher for 2 weeks, then we had a new lower low. So it's difficult to catch these low points, and therefore you have just to do your own due diligence and set an entry point. Where do you want to enter? Do you want to enter technically when we move above 160, or do you just want to buy in because it's now at a cheap fundamental level? Yeah, just decide on your own trading style. If you are a trader or if you're an investor, how much money you want to go in this trade, and if you want to do it all at once or with 2 different positions in different times. Yeah, it's just up to you. There's no golden rule like how you should do it. It's just up to you. NG and oil, please, and sugar, can we buy at 19? Yeah, we already talked about sugar, and I don't want to trade sugar to the long side. So let's go back to sugar here. As you can see, we're pulling down, and yeah, this is a potential supporting area now. We are reaching this potential supporting area, but I won't trade it to the long side. I wanted first to see a retest of the 0.19 level here. You could potentially trade it to the long side. Maybe we'll see a smaller bounce, but I don't want to trade against the trend here. Just to trade these small, what is it, 1.7% maybe. Therefore, I don't want to trade it to the long side. I rather want to trade the breakthrough here. So if we go to lower lows below 0.19, I can take on a short again. There you have more safety and more room to the downside, because you see here we were really strong, and the next level here should be the low point here at 0.175. So there's a lot of room to the downside here, about 7.3%, and that's interesting if you have just your stop loss right here, but a lot of room to the downside for a potential closing of the trade with a gain here at this area. And the same for crude oil, we talked about this already. So I'm not in a position right now, but it's still weak. You could trade it to the short side again if we break the lows here, or just scalp it to the upside for an intraday trade as soon as we reach the previous lows here at $73.40, and we will probably see a smaller rejection to the upside. And natural gas the same. I have my short put, but yeah, probably we'll see a smaller rejection to the upside up to this maybe $4.50 area, and then we will see maybe more weakness. You see here the 9 EMA level, the 20 EMA level. We are far away from this level, but we didn't manage to go above this 9 EMA level for a lot of days, as you can see. And yeah, it's time for this oversold future here to go back to its moving average. But only because it's oversold, it doesn't have to go back to its moving average. Back to Nasdaq, because the news are about to come out in just some seconds. We have 10 seconds left. Let's see the movement here on a 1 minute chart. What's going on? And selling off a little bit. Okay, we see ISM manufacturing PMI is almost in line, a little bit lower than expected. That's perfect, almost perfect for the market. But JOLTs job openings are higher than expected. That's not what the Federal Reserve wants to see. That's bad for the market because it means still higher inflation risk. And the Federal Reserve Chief Jerome Powell made clear that he wants to have a worsening job market. So as crazy as it sounds, he wants to have more jobless claims, and therefore less people earning less money, and then we will have less inflation risk. That's what you want to see. But as we already talked about this, we have to wait. It takes time until all the interest rate hikes are coming to the last figure to the job market, because in job market we see at the last time we see job market changes here. And it takes 3 to 6 months until we can see the effects of higher interest rates. And therefore we won't see this until the end of January. I don't think that we will see here an effect to the job market. And that's just normal that we see, it's almost in line like previous months, as you can see, almost the same number here. A little bit lower than previous months, but still above expectations. So it's not really worse, but a little bit worse than expected for the market. ISM manufacturing is almost in line, so almost no effect. More important will be meeting minutes. I won't live stream these, but you will see a lot of movement around the outcome of these news here, of course. Still below the 11,000 level. So as you can see, our important level here we drew here, and we hold here at this level. So we see the importance of the good preparation. So you see the area, this was the first support level here, and we could hold it today. Moving back now to the 11,000 level. And that's why you shouldn't predict the outcome of the news, because everything can happen. The news are a little bit worse than expected for the market, but the market can pull higher, then it has nothing to say. Therefore, wait for the market to settle to find its direction. What we want to see is a breakout above the highs. And if we see the breakout, then you can enter a long position. As long as we are trading here sideways, it's not interesting to take on a trade, because you will be kept in a sideways trading phase. It's not interesting to trade this unless you are a scalper. But that's difficult to trade. Most of the beginners will fail. Therefore, I wouldn't trade here unless we are clearly above, closing above the 11,050 level here. Selling off, but now look, it's like nothing has happened. The outcome is like this is where we were before the news, and now we are at about the same level. So it's just trying to find its direction. So now all the stop losses here were fished. All the people who wanted to enter short are in their position now and are right away in the red. And all the people who thought, oh, it's bullish now, their stop losses were also triggered now, because now it's going back again. So it's going back and forth until we see a clear breakout to the up or to the downside. And I wouldn't trade it until we see a clear breakout to the upside here, 11,050. Then you can take on more longs. Or to the downside, below this supporting area here, below 10,900. Then we see more sell-off, of course. But as long as we couldn't see a breakout, it's just sideways trading. It's not interesting to trade this. Aston Martin stock. Okay, interesting. I haven't seen this stock for a long time. Let's bring Aston Martin up. AML. So don't wonder about the price. It's in British pence here. It's in London Stock Exchange. So see the day chart here. Oh, it's looking pretty bullish with higher lows, higher highs, and we are above the previous low point here, so we should hold above the previous low. Then it's still looking good. As soon as we break the previous low point here, it's not looking as good anymore, but it's still bullish. Even on a weak chart, we are now entering a sideways trading phase. As you can see, we have to break above the 200 level, or 180. Yeah, 180 and 200 I think is an important resistance area, and when we can settle above on a weekly time frame here, then it's looking more bullish, and then you have more confirmation of entering stage 3 of a reversal. So we are trading to downside here. We are in a sideways trading phase like we are in Nasdaq, and as soon as we see a breakout above the 200 level, then you will have more safety for an uptrend and for a reversal. So yeah, if you want to be early in a trade, place just 10 to 20% in your trade here of your position size you want to have, and as soon as we break the 200 level, then go in with more position size. And yeah, it's interesting to see on a day chart it's already looking good. On a week chart you still have to wait for the breakout to higher levels. Okay, market is pulling back now. Yeah, let's see if this will stay weak here. Next support area 10,900. I will just be live for 2 or 3 more minutes just to see if we can hold the level here, and if not, then we will probably see a decision when we see the Fed minutes. Then we will see even more volume. I expect Federal Reserve minutes to be dovish, but everything can happen on the outcome of the news. Small support here. Let's see if the support area is holding or if we are selling right through. So there was a smaller support yesterday, but it's only a smaller support. Selling right below 10,900, just catching some stop losses here and entering back in this area. Therefore, don't place your stop loss too near to these levels. I'm always talking about this. Always give a little bit room. Lower your position size, but give a little bit room to your stop loss levels, not to be triggered right at these points. Of course, it's weak. We can still see more sell-off here, but we will probably see just 2 or 3 more candles in this area here, and then see more sell-off, or then see a reversal. Therefore, don't place your stop loss level right below 10,900, because as you can see here, we just went 16 points below the important 10,900 level and then went back up again in the supporting area here. Not moving really fast today, because at 2 p.m. it will be more important to see Fed minutes. This will cause the market to go even higher or even lower. I think this will have more importance than the economic numbers. And of course, let's just have a last look on the economic numbers for the next days. For tomorrow, there we will have initial jobless claims like every week. I will try to live stream these, but I will have to change one date. I have at 2 p.m. my time, and this is 2:30, so let's see if I can live stream this here. And of course, ADP non-farm employment, this will be more important in my eyes, because this will give an outlook on the numbers of Friday here, because there we will have non-farm payrolls. Non-farm payrolls, yeah, there we will see a lot of volume, I think, if we see higher or lower than expected numbers here. And therefore, I will try to live stream these ADP non-farm employment change, because this will give an outlook for the Friday numbers of non-farm payrolls. Okay, for now it's looking really weak, but everything can change at 2 p.m. Eastern. Be prepared for the outcome of the news, because everything can change then. And in the best case, we will see now come down, then we'll see sideways trading phase, maybe at the lows of yesterday. So be prepared to see at the lows of yesterday here at around the 10,850 were the lows of yesterday. If we can settle there, just sideways trading, and then see the reversal when the news come out. to the upside again. This would be ideal for my long position, but everything can happen here. For now, it's still weak in a sideways trading phase on a daily chart here for Nasdaq. I say thank you for watching. Have a nice trading day. And if you want to, then please subscribe to my channel, and of course click the bell to be informed every time I go live again. We will see us tomorrow if you want to. Have a nice trading day. See you. Goodbye.